Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. While raids in Mumbai often tend to disrupt the citizens' lives by halting the regular trends, data from the markets tend to do something similar, create or halt trends. A weak US job market has been keeping a rising dollar at bay, but the weakness in Asian currencies have been keeping long-term sellers of the dollar cautious. JK, how are you reading yesterday's moves? Though we didn't see any major action, what would markets be looking forward to now?
Good morning, Swaraj. Yes, yesterday we didn't have much of indications from the economy on either side of the Atlantic. In fact, barring the NY Fed's inflation expectations from the consumers, and that showed a drop in the 1 year inflation expectations. And beyond that, there's not much data that we needed to assess. But as you know, we had a lot in the last week, including the jobs market indication, ISM, all of that, and still the dollar is almost in the same range. Euro is back at 1.0820 after having failed to break 1.0650 at the peak of the uncertainty of French elections. The worst case scenario for Europe, which is the French leaving the Europe prospects, if the right wing comes forward, that has been averted, almost certainly averted. But we have a little lesser uncertainty as to the hung parliament, how it's going to result in a new coalition, or whether how workable it will be, because even within the left, which has got the majority, or rather the major number of seats, even that has a lot of fractions. And so how effectively the policies can be implemented. So the uncertainty on the Europe is still remaining. That's why Euro is not able to make much headway beyond 1.0850. Effectively, we are staying in the same range. What the market would be looking forward to is what the Fed chief is going to say today at his testimony to the Congress. And Congress would be definitely looking to ask him the reasons for keeping the rates higher for longer, and whether he is pushing the economy into a recession. So these are the questions that Powell will be answering, and whether how his reaction is going to be to the recent spate of weak numbers and also the soft inflation numbers. So that's where the market is looking to take clues from. And of course, the Thursday's CPI number will also throw some more light on the inflation trend, whether we are still seeing a deflationary trend. But if you look at the expectations as such, most of the expectations are flat, in the sense they are not going to change much from what was last month. And so that the headline inflation number actually goes up by 0.1%, and that I am putting down to the rise in the global crude prices, which would have impacted the gasoline prices in the US as well. So not much that the market has been able to derive from the data conclusively. Yes, September rate cut chances have increased, and even Powell or some Fed members might start hinting at it if the CPI numbers comes in that direction. But that much has been discounted in the market. So the currency markets don't really have something very big that they can latch on to and create a trend, and that is not possible. And the only thing that can happen is if yen turns around decisively, and that is one chance that is possible when Japan Central Bank meets on July 30th and 31st. Having seen their intervention fail, the central bank might resort to policy tightening. Yes, there are indications from some numbers which show that the wage increases have been widespread in Japan, and this could eventually lead to their motive of having the consumption increase and economy to see much better demand situation. So that's the only thing that I look forward to for currency markets to have directional change. Otherwise, I think the current rangy trading in the major currencies should continue, and the yen and yuan continue to weak. Yuan fixing today was just tad lower than the highest fix for the cycle. So again, offshore yuan is back above 7.29 as well. The only stable currency is sterling after the massive victory that Labour Party got. But again, market is waiting to see their budget and also how they what policies they come out with to spur the growth of the economy. So it's a wait and watch for most of the currencies. So dollar index remains in the range. That really is something that you don't need much reason for rupee to remain quiet as well. And if the traders have been traders reaching office has been affected yesterday, that could have been one reason why even more narrower range for the rupee was seen yesterday. But yes, I think in India we are looking forward to the next big event of budget, and that's coming on 23rd of July. So stock markets are not quite, at least they are looking to discount a good budget, and what sectors and what policy impetus that the government is going to give through their budget. So these are the things to look forward to. So a very rangy market, but things could be working in the pipeline for at least for the global currencies is what I feel. Thank you.
Thank you, JK. And of course, the major theme is the rangy market of the currencies. Powell's testimony is something markets will be looking forward to. Now, his testimony to Congress will be held today, and the Congress will be keen to know why rates remain higher despite weaker data and softer inflation. So markets might take some cue from that. Japanese yen can be another trigger for the markets if the Japanese central bank decides on using policy measures to rein in the yen, but nothing much to write home about. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.